Chris is the Director of Business Development of Velocity Markets. As the new year dawned, war tensions increased, and investors turned to safe havens to protect assets and find speculative alpha. During this time, gold responded strongly, low-yielding US treasuries did not. This suggests investors are potentially looking for global safe haven refuges untethered to the whims of a singular country as central bank. Bitcoin can check this box and does grab attention, with many claiming its short-term price action acting as a safe haven asset. What has it achieved this vaunted global role? Let us look closer. As 2020 kicked in, the Wall Street Journal reported that gold jumped to its highest level in almost 7 years with tensions between US and Iran escalating, the latest example of investors favoring the safe haven metal to protect against a market downturn. The article went on to cite CETC data showing hedge funds and other speculators ramped up bets on gold prices for the third consecutive week, to the highest level in months. Mirroring the shiny metal, and in the same early days of the new decade, Bitcoin achieved $, causing many Bitcoin bulls to claim safe haven victory. However, despite this very short-term correlation, the longer-term data has suggested no correlation, or anti-correlation, to the S&P and no long-term correlation to gold. Doubts by David Martinell to this parallel rise and fall of Bitcoin and gold in the same fundamentals-driven ecosystem suggests a like role for these two asset classes. Investors in Bitcoin should be cautious. Hanging their hats solely on this thesis is with the longest bull market on record. Bitcoin, as well as other assets in the age of modern monetary theory, hasn't been fully stress-tested during prolonged times of economic distress. Bitcoin also has an interesting and often uncertainly evolving regulatory framework that makes it less of a safe haven in its current form, largely because it is not as efficiently priced due to lack of access from large household name institutions. Safe havens provide refuge or security. Safe haven assets ideally are uncorrelated or negatively correlated to the overall market during periods of distress. They must be liquid, as in risk-off scenarios. Gold is a tangible, hard asset that is easily bought and sold at quantity, avoids country-specific currency exposure, and is globally transparently priced, regulated and safely traded in multiple marketplaces amongst sophisticated investors. Gold has also been around for thousands of years with a more certain regulatory status and better documented history of safe haven and inflation hedge status. Charts by David Martin. Looking towards Bitcoin, there are many properties it shares with gold that share aspects of a safe haven. A finite quantity to be mined and a worldwide distribution network that may not be as sensitive to the whims of one country. The scarce supply and wild trading movements almost echo the recent price action of rhodium, a much more volatile and rare precious metal than gold. However, there are also many things, not including its youth, that it must overcome to become a true safe haven vehicle. The market structure right now is largely driven by an unregulated futures exchange, allowing users incredible amounts of leverage with minimal insight into the black box of how this centralized. You can read full post on CryptoFans News, link available in text below.